Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Monday, the 24th of May. Starting off with Amigo, where it's always exciting to look at a stock which depends on the whim of a judge in terms of its price action. Here we've got a rising trend channel from November. I think the last time I looked at it, I was looking at sort of 17 pence as being the potential support area. In fact, we've got the floor of the channel here at 15 pence, so an end-of-day close back above 15 pence today would suggest that we're back on course for a retest of the 30 pence area, whatever the legal situation is at the moment. Drilling a bit deeper, there's the top of the gap there, the gap down that we had last week at 22.5 pence. So maybe there's a squeeze up to that level, even if the shares then fall away after that. Onto a stock which is less high profile, and it's AIQ. Here we've got rather a common setup that we'll see on other stocks here today in the Bulletin Board Heroes. Sort of falling wedge, bear trap type of situation. So here the old low there around 10.4 pence and multiple lows just below 10 pence over the course of May. Not the most liquid stock obviously on the market either, but looking for an end of day close through the resistance line there from February and also the 50-day line. That's around what's that, 15 pence, and an end of day close above that could then allow a retest not only of the 20 pence area but maybe up to 30 to 40 as a best case scenario. All of that valid while we hold above 10 pence, or at least 9.5 pence on an end of day close basis. Moving along to Bulletin, which again has that kind of bear trap rebound look to it. In this case, you can see that shares just sort of pushing down towards that 3.52 low of March. I think the low today at 3.52 as well, so I suppose it's a double bottom, but a sort of bear trap effect versus the January support for the start of the year. End of day close above 4.5 pence, and that broken February resistance line could take the shares up to 6 pence initially, and then obviously we're looking and dreaming of the initial 2021 resistance at 9 pence perhaps over the next 1 to 2 months, or the following 1 to 2 months, if we hold above 4.5 pence. Stock which was a bit of a hero earlier in the year and perhaps more last year, the end of last year, we sort of triple topped for Contango through 10 pence from December through to March. Current situation is, looks like we've had a bear trap below 6 pence and also hit the floor of that falling wedge from February. End of day close above 7 pence, and the 200-day line could then give the shares another chance at trading up to 10 to 12 pence as soon as the end of next month. A stock which was eyeing up a few days ago, myself, Cadogan, as a potential mover to the upside, has actually broken out today. A nice break through that April resistance there at 5 pence, and above 5 pence on an end of day close basis, looking towards 8.5 pence, which is the top of that broadening triangle from back in December, and that could be seen as soon as the end of next month. Good to see some of the COVID-related plays coming back today. First one of them is 4D Pharma, which actually has a similar chart in a way of late to what we'll see at Synairgen. But here we've got a bear trap rebound rather from below 102, which was the March low there. We went down to 90 pence at the lowest earlier this month. But we've broken above the 20-day moving average and the March resistance line there at 102. And while we're above that, looking for at least a retest of the 200-day moving average at £1.14. That's still rising, so that does actually suggest that this has been a dip to buy into rather than a potential breakdown for the shares, but just making sure that the weak hands were cleaned out. The old lows there around 87, so higher support for May versus November and December, which is good news. So that does allow for the shares to eventually, on a 2 to 3 month view, maybe hit the top of the broadening triangle from December as high as £1.60, maybe by the end of July. One of the stocks which I probably cover more than most, I'm not quite sure why, maybe just like the name, is Itaconix. But it has to be said that the charting configuration has been quite positive, or very positive. The highlight here, I suppose, is that, or was that gap through the 8.5 pence level last month. We actually bounced off the floor of the gap and then rallied after that. But that's a pretty good and a strong signal there, a continuation signal, and the shares have lived up to that. Top of the channel here from November as high as 25 pence, and that could be seen as soon as the end of next month. You normally see 15 to 25 as a progression for a stock, and then from 25 to 40. It just seems to be one of those magic rules that you tend to get. But this situation anyway, above 15, looking for 25 initially on Itaconics. Stock which was rather obscure, but has become rather more famous as it's risen, is Crops. Here we've got a situation where there's been a beautiful key reversal to the upside today through recent resistance at 10 pence, and above 10 pence we're looking for a target here as high as 18 pence, which is the top of a rising February trend channel. In fact, one could probably stretch and move that target a bit higher than that, maybe 20 pence by the end of next month. But let's see how we go just over the early part of this week. The RSI at 96 is obviously somewhat overcooked after the push to the upside we've had so far today. As I said, the COVID plays seem to be back in business, at least to some extent. Best of them today, arguably, or by quite a long way actually, is Synairgen. Here we had a kind of falling wedge situation for the shares. They, I suppose, tested old initial December resistance as new support, and then spiked up higher today. The view at this stage is that while we're above the 20-day moving average at £1.14, we could go on to test the old peak from the end of April at, the end of April there at £1.59. That could happen as soon as the next couple of weeks. Big picture target here while we hold above the 20-day line as high as £2.20 or 30, which is the top of that broadening triangle from the end of January. And obviously, if that was hit, that would be quite a result for all concerned on the long side. Tiziana is next, and good to see that there's been some decent response to yesterday's Sunday roast here at Vox Markets. We had this sort of false dawn last week, or the other week, with that move towards 82 pence, but we're still within this falling wedge from January. We need to break that 76 pence level on an end-of-day close basis now in order to give the stock a chance of hitting the 50-day line as an initial target over the next couple of weeks, which obviously would be a decent result. This stage only really sustained price action back below 70, delaying the upside scenario. Just a couple of stocks to go now. First one is Wishbone, which is trading well in the wake of last week's premium placing at 14 pence. It's always good to see a stock remain above the placing price, especially when it's a discounted one. Even better to see it push higher than the premium placing level, especially given the way that so normally most placings are discounted rather than premium at the moment. The top of the channel here from the end of August is as high, it was pointing to as high as 24 pence, and that's the target here by the end of the month, especially while there's no end of day close back below the aforementioned 14 pence level. Stock which has been very, very bullish indeed, and actually has sort of done it rather quietly. There hasn't been that much interest in Zoo Digital on social media of late, but here we've got a situation where we've broken out through the old £1.35 high from last month, and an end of day close or weekly close above that could take the shares onto a 2 to 3 month target as high as £2.50, perhaps by the end of July. At the current rate of progress, they're looking quite well placed for Zoo Digital at the moment. That's it from me today. More updates tomorrow.